After a quiet spell, the pace of corporate reporting here in the UK will start to pick up a bit of a gallop in the coming week. Names which may be worthy of further note and research include the following, although do note some of these dates could yet be subject to change. Phoenix Group and Sirius Real Estate on Monday the 8th of September. Metal and Energy in Metals, Dunelm, Mobico, James Fisher, Somero and Gamma Communications on the 9th. Associated British Foods, Vistry, Pan-African Resources, Central Asia Metals and Jim Group on the 10th. And Trainline and Fever Tree Drinks on the 11th. We're going to focus on three of those in the shape of the two retailers, Dunelm and AB Foods, and for something a little bit different, the gold miner Pan-African Resources. To start with soft furnishing and homeware group Dunelm, its shares are more or less unchanged over the last year and indeed over the last 5 years, although it's been a wild ride. The lockdown home improvement boom gave way to a lull before wage growth and saving rates carried the day, only for wider worries over inflation, the economy and wider consumer confidence to weigh this year. These full year results at the end of June will be the last ones presented by outgoing Chief Executive Nick Wilkinson, who will step down in October after 7 years at the helm and be replaced by Claude Moriarty, who joins from Sainsbury's. No doubt Mr Wilkinson will be looking to go out on a high, and attention will focus on four figures in particular. The first is sales, where July's update pointed to a full year number of £1.77 billion, up 4% from the prior year. If Mr Wilkinson feels able to give any guidance for the year to June 2026, the current consensus is for a 5% advance to £1.85 billion. The second figure is gross margin, a good guide to full price sales and stock management. Dunelm's already flagged a 60 basis point or 0.6% improvement, which is pretty good work in the current environment. The third's headline pre-tax profit, where management has already expressed confidence in meeting the consensus forecast of £210 million. Any stay for the new financial year may therefore be of greater interest, and analysts are currently looking for an increase to £221 million. And the last figure is the dividend, where last year Dunelm declared an annual payment of 43.5p a share, backed up by a special dividend of 35p a share. Now, after a big rally from its spring lows, AB Food shares are up by some 8% in the past year, although they're still yet to recapture the 2015 all-time high. Two profit warnings from the sugar business, worries about the impact of Chinese competition and President Trump's tariffs at Primark have all to some degree overshadowed improved margins at Primark, a special dividend and a second share buyback programme. Now, this is a trading update ahead of the full year results early in November, so analysts will look for any comments about performance at each of the retail, Primark, grocery, ingredients, sugar and agriculture operations. They'll also look for specific updates on the Spanish sugar business, the Vivergo bioethanol plant here in the UK and Allied Bakeries. All three of those lose money, and action is underway at each in the form of restructuring, closure and the acquisition of a major rival respectively. The trends here will help to shape the headline earnings per share and pre-tax profit numbers for the group. And in terms of those earnings per share figures, the current analyst consensus forecast is for a stated figure of 160p a share, down from last year's 194p, and a smaller percentage drop in the adjusted earnings per share number to 174p a share. Finally, we come to Pan-African Resources. The gold price is trading in a new all-time high as I sit here, nearly $3,500 an ounce, and this is putting a shine on shares in the gold producer, whose Evander, Tennant and Barberton mines are in South Africa. The share price stands at an all-time high. In the year to June 2024, Pan-African produced 886,000 ounces of gold at an all-in sustained cost of production of $1,354 an ounce. And a summer update flagged figures of 197,000 ounces at an ASC of $1,575 an ounce for the year to June 25. Watch for any guidance for 2026. Staff, fuel, tax are big variables in the production costs. Analysts are expecting net profit to almost double to £212 million in the year just ended and double again to £227 million in the year to June 2026. That trajectory supports $11 million of share buybacks and also analysts' forecasts of a big hike in the full year dividend to 1.23 pence a share. Thank you for watching. I hope that you and your families are all keeping well, and I look forward to seeing you again next time.